Are you ready?
Ready.
All right, let's go. Kevin here, Top 1 Financial Advisor and best-selling author. We are here to talk about the stock market. Anytime that you're looking to invest in something, there are things you should pay attention to. In fact, we've done plenty of videos on things you should pay attention to and questions you should ask before you invest. However, every year brings a different challenge and every year has a different wrinkle to it that can determine what makes sense to invest in, what makes sense to avoid, and what makes sense to sell. So this year, based on what we've seen mostly in January and somewhat of the end of 2022, here are 3 additional things that you kind of want to layer on top of your investing decisions. Now, some of this could change, it may change if there are any new factors that are unforeseen this year, but right now, these are 3 of the things that should be on top of your list. If you're looking to invest in something or if you're trying to decide whether or not to sell, say, hey, look, let me go through these quick questions, quick areas, and then you should have a clearer decision before you move forward, all right? Let's go ahead and get into it. So the first thing you want to do is pay attention to layoffs. It is not fun or fair, but it's particularly in the tech space. That's where you really want to pay attention to it because right now the economy is strong. It's not perfect, but GDP, gross domestic product, all the stuff we produce as a country has been positive the last 2 quarters. Unemployment is relatively low. Prices are coming down. Inflation is, down more than 2% from where we were last year. The job market is still strong. Things are fine. However, some companies, Amazon, Microsoft, Google, and others have started to cut back on people, which is not fun or really fair if you ask me. But aside from that, they are looking to become more profitable and look more attractive to investors. The reason why is because they hired so many people 3 years ago and they're saying, look, we might not need all these people. And the stock was down 20, 30, 40% last year. Well, if we cut staff, right, we cut expenses and keep our revenue the same, we're going to be more profitable. It's going to look great on the balance sheet. It's going to look great to investors on the income statement. And those stocks have shot up every time that these companies announce major layoffs, which again, I don't like to see. The stock does rise. So you do want to pay attention to which companies are being, fiscally responsible, which companies are paying attention to their expenses and things that they can shift, slow down, or move around. So just pay attention to it. That could be an indicator that the stock is ready to start to grow again. So just pay attention to it. What I'm not going to do is say, everybody who's cutting people go invest in those companies. I don't think that is right, but also that's not just an indicator in and of itself. Just something to pay attention to say to say, hey, were you responsible and how are you managing your money, basically? And are you just overhiring and just overdoing things? Target overdid their inventory last year. It was one of the reasons why it didn't do well. So just pay attention to that area and see whether or not that helps to kind of give you a better picture. The second thing is momentum. Now, this is something I always talk about, how a company has done, and there's a UCLA study on this, how a company has done in the last 6 months and how a company has done in the last 12 months is an indicator, it's not a guarantee, it's an indicator of what it could do the next 6 months or the next 12 months. The reason why I want you to pay attention particularly to the last 6 months of really, I guess this would be December going back through June, is because one, it is a very similar environment to what we're going through now. Inflation at that point in time or that era was going down, okay? And we knew that unemployment was fine, job market was fine, and most importantly, interest rates were going up, but also started to slow down near the end of the year. Remember, the Fed was raising it by 75 basis points, 0.75%. They kept doing that for a while and they said, well, let's cut it back and let's do 0.50, 50 basis points. Well, the Fed is likely to do the same because they want to be aggressive to fight inflation, but not too aggressive. So the best environment that we saw that happen in was the last half of the year. Go back and see which companies did well between the second half of the year. Those may continue to translate on this half of the year, or at least within, I would say, 6 months, but at least the next 3 to 4 months in my view, unless again something else crazy happens. So you do want to pay attention to that. The last thing that you want to pay attention to is how the stock, or I'm sorry, not how the stock is moving, but how they're talking about themselves in terms of earnings. Earnings have been happening significantly, but essentially earnings are when companies come out and say, hey, here's how we did. Now, if there's a company that has not announced yet, there are simple ways to do that. I actually did a video last week on where you can find the information, but you can also just Google, I don't know, Apple earnings date, and it'll tell you when their most recent earnings date is. You want to see what they are expecting to happen the rest of the year and what happened last year, because that's going to give you more information too on what happened the last year, but also the last 6 months, and give you more context and information of what you should be aware of. Okay, so 3 things you need to pay attention to: earnings, layoffs, and momentum. Use those to color your opinion and give you an outline on what could make sense to invest in and what may not make sense to invest in. Also, over the last week and really over the next 2 weeks or so, you'll notice that I will be spending a lot of time digging into some of these earnings statements and notes and things, just to figure out like where y'all headed, right? What's on your mind, Microsoft? What are y'all doing? That way I can get my expectations together, but also decide whether I want to continue investing. Is it time for me to sell? So on and so forth. So that's just one example, but you do want to really use these 3 things this year to help give you a better picture, because again, this situation is different than where we were this time last year. Okay, so keep that in mind. All right, that is it for me. I'll talk to you tomorrow.